We would expect volatility at least in the short term on this piece, but we will have to manage the numbers. Now, just as a perspective, overall, the non-branded business is just about 10% of our total India revenue. So from that perspective, it is not as significant, but we would expect some road bumps at least in the short term.
Thank you, sir. We'll take the next question from the line of Sheela Rathi from Morgan Stanley. Please go ahead.
Yeah, thanks for taking my question. My first question again was on coffee business. So Sunil, if you would like to call out, what kind of distribution innovation plan we have with respect to, taking up our coffee branded business higher from where we are today?
So let me say we've got significant opportunity out there. I'll point back to one of the reasons why now we have done a split routes at the front end is primarily because that was becoming the blockage for us to expand our portfolio and expand different SKUs. Coffee did grow 29% for the year and 45% for the quarter, but I think we're still scratching the surface. We've still got a significant amount of runway out there. This year, that remains a focus, especially with A, the innovations that we have planned, B, the amount of media spend that we are putting behind it, and C, between the enabling infrastructure that has been put into place.
And what kind of distribution the coffee business would have currently versus CRT business, and if there is any difference here in terms of B2B or B2C strategy?
So it's primarily a B2C strategy. We are significantly behind. I think we've got still way to go. In the southern markets is where we had initially focused. There the gaps they're still large, but relatively smaller compared to the rest of the country. We've still got, we are not there by a mile.
Thank you, sir. We'll take the next question from the line of Percy Panthaki from IIFL Securities. Please go ahead.
Hi, sir. So in the standalone, we've seen some kind of a margin contraction this time. I believe it's because of a higher ad spend, which is purely a phasing issue. So can you just try and quantify that for us? What is the increase in ad spend on a YOY basis as a percentage of sales so that we can get a better idea of the underlying profit growth for the standalone business? Thanks.
So Percy, hi, thanks for the question. We have stepped up our A&P, as Sunil mentioned earlier. It's almost 100 basis point increase over last year. So I think that's one reason for a bit of underlying numbers on the EBITDA on standalone. The second, of course, is the Capital Foods, which has a marginal impact. As the full synergy benefits come through, we will see this improve.
But Capital Foods is not in the standalone, no? It's in the subsidiary, right?
Part of it is in the standalone as well. But I think bulk of it is attributed to the A&P increase, which is almost 35% growth versus last year, as I said, 100 basis point improvement.
Understood. Secondly, just wanted to understand on NourishCo, what is the total distribution reach that you have right now and how does that compare to the universe?
So the total distribution reach last year was about 650,000 outlets, which we improved to 950,000 this year. So that's about a 50% increase. But I would say we're probably if I take an index to what the universe is there, we're probably at maybe a 15-20% of the universe. But see, long way to go.
Understood. And you are growing so rapidly. So are you really just taking market share from the very small unorganized tail brands, or is it also some amount of market share gain from the larger brands in the packaged drinking water space?
So our portfolio is completely different from the big boys, right? I would say in the packaged drinking water, which is Tata Copper Plus, and I'm just taking there will be a significant amount of market share that we would be taking from other players, as well as taking off from organized players, but the unorganized players, sorry. But the larger portion, I would say, is probably coming in from the branded players, right? Now we're the number 5 water brand now in India. Tata Gluco Plus is a cup which is a completely differentiated format. I'm not sure we are taking away from the big boys. There is enough category expansion out there given per capita consumption that we are driving for.
And Tata Gluco Plus would be approximately what percentage of your NourishCo turnover?
It would roughly be about 40% of the total NourishCo turnover. 60% would be Tata Copper Plus.
Okay, sir. Okay, that's all from me. Thanks and all the best.
Thank you. A reminder to all the participants to kindly limit their questions to 2 per participant. We'll take the next question from the line of Arnab Mitra from Goldman Sachs. Please go ahead.
Yeah, hi. My first question again was on the international margins. So we've seen a big step up in the fourth quarter compared to even the last 2 quarters. Was there anything specific this quarter which additionally led to a margin expansion, or this is the full benefit of the changes you've done? And a related question is, this coffee inflation last time did hurt your US margins. Do you anticipate any pressure given the current trend from the coffee prices?
So let me answer your second question first. I think last time around we were, what's the right term? We were a bit slow on the reaction because we had not expected the pricing to move as fast as it did when coffee prices came down. And our reaction time on the shop floor and converting it into promotions was a bit slower than competitors. And therefore, it was a double whammy. I mean, volumes were soft and we did not get the throughputs. This time around, we've been very agile because we saw this coming slightly early in the day, and therefore we've moved in line with coffee prices. So I would not, while absolutes might move up and down because of the softness on the total top line, with the price increases that we are now seeing coming in back into the market, margin terms, I don't think there will be too much of an impact. If anything, we should expect an improvement. That's number one. What was the first question? Sorry.
It was the margin itself.
Okay. So on the international business, couple of things. We had kicked off our international restructuring last year in the same quarter, right? So this year we are seeing the full benefits of the entire, and when I'm talking of restructuring, it's not the legal entities restructuring, the cost restructuring in the international business. So we're seeing the full benefits of that flowing in. That's number one. Number two, last year about this time was when we started revamping our entire product/brand proposition especially in the UK, where we put in 10% Assams into the tea, brought it up to par, changed our entire packaging, made it sustainable, changed our execution dynamics, and went for proper distribution and execution in a heightened manner. We're seeing the benefits of all that flow in. Plus, because now we've got a stronger proposition in the market, we have also started to take price increases to put us on par and not at a discount to all the competitors in the market. We have taken some pricing again this year, and we are seeing our maintaining of market share despite all the pricing that they were taken. That's number one. Number two is also remember the fruit and herbal and specialities are the growing parts of the market, also the better margin parts of the market. That part of the portfolio is also getting ramped up. Between Good Earth and Teapigs, we are now up to a 10% share in the UK. So all multiple pieces flowing in, we do expect to see, as I said, the international margins right now are about 200 to 300 bips better than our India businesses, overall businesses. We do expect to see that accretiveness to continue.
Sure, Sunil. My last question is on salt. So, you've had a huge market share expansion. And now from here on, is the pace of expansion going to be a lot more modest, given that the distribution leg has already played in, and given that the category itself doesn't grow much? Does it mean we should expect less than mid-single-digit volume growth now in salt going ahead?
So let me put it this way. If I rewind about 18, 20 months back was when we took our significant price increases, which was roughly around 30%. At that point of time, our overall market share was primarily driven by value and not by volume, because we put our margins on track and continued to execute. Right now, our growth is driven by volume and not as much volume because we have not taken pricing at least for the last, I think, 15 to 18 months, if I'm not mistaken. So right now, it is a pure distribution expansion, portfolio expansion. Now, value-added salts are now 9% of my portfolio versus when we started with the merger 4 years back, it was about less than 1% out there. So value-added salt, volume growth, distribution expansion. You would have seen the recent IPL opening day, Tata Namak advertisements. We're putting salience behind it. So we remain confident of continued growth in market share. I do not see a reason for us to slow it down significantly.
Thanks so much. All the best.
Thank you. We'll take the next question from Rohan Kale from Incred Capital. Please go ahead.
Yeah, thanks, sir, for the opportunity. Just wanted to check on the non-branded business margins. So I'm assuming you've got strong gains on lower priced inventory of coffee. So just want to understand how much of this inventory do we have left? Assuming now you will be procuring at current market prices, how should we look at these margins sustainably, at least in the near term? And second question on the asset write-downs that are mentioned in the exceptional items. Just want to understand what the rupees 620 million asset write-down was.
So let me take the first one and I ask Ashish to take the second piece. Like I said, the unbranded business is in two pieces. There is largely a flow through with a delayed impact of either up or down on coffee prices in the solubles business because we buy coffee, convert it into solubles/extractions and they then sell it off. On the coffee plantations, there is a straight revenue uplift which increases margins. Right now, we're seeing prices going up and therefore there is a benefit for the coffee plantations more than solubles. On the solubles business, we do not expect too much movement because of prices going up and down. Ashish?
Yeah, on the second bit, as I was explaining earlier, this is largely as part of the annual review process where we look at all assets and across various parts of business looking at the capacity utilization. On a more prudence basis, we have taken provision on some of these assets.
Understood, sir. Thank you. I'll get back to you.
Thank you. Thank you, sir. Ladies and gentlemen, I would request Ms. Nidhi Verma to kindly proceed with the next question on the webcast. Over to you, ma'am.
Sure. Thank you. So there are a few questions on the webcast. I'll just read those questions out. The first question is from Kajol. She's asking, can you please provide some more light on the subdued performance of Starbucks during the quarter? And yeah.
We've already talked
about. Yes, we've already answered that during the opening remarks, Kajal. There is another question from Nikhil. How long will it take for it to complete the integration of acquisitions? And when can we expect margin expansion based on these acquisitions?
Yeah, so we've always guided for a 100-day integration. We remain on track for, so Capital Foods we acquired February 1st. So by April end, we will complete the acquisition. Like I said, 95% of our front-end distributors are already billing Capital Foods and we are on our way. So we will complete Capital Foods in 100 days. Organic India was 16th April. We will complete it in 100 days and post that you will start to see margin expansion coming in.
Yeah, thank you. There is a question from Keshav. He's asking, is there any updates on the rights issue and any timeline?
So, Keshav, we are on track on the rights issue. The process is on, and I think we should be able to conclude it by early Q2.
Thank you, Ashish. There is a question from Jigar. He's asking, what is the reason of profit decline even though revenue has grown? So, I think this has been explained enough, Jigar. It's led by exceptional charges. Net of that, the profit has actually grown 42% as you've seen. There is a question from Samar. He's asking, can you give some color of the business of Starbucks, again, in terms of its revenue and earnings to overall business? So I think you're asking about the accounting treatment. It's share of...
Starbucks is not accounted for in our consolidated. We consolidate it as part of associates and JVs. 1,200 plus crores of top line, which has grown at 7% for the quarter. Yeah.
Yeah, I think that's pretty much it from the webcast. Sorry, there's another question asking if there are any plans on entering the BPC segment.
So, like I said, we've always said that we want to be a total FMCG company. Right now, we're focused on being a food and beverage company. I think we've shown our intent very clearly to grow organically and inorganically. We do think there is still a runway left there. Once we think we've exhausted the runway out here and we see a bigger opportunity in moving beyond food and beverage, we will definitely look at that.
Okay, and I think there is another housekeeping question from Neeraj. She's asking, is the decline in India business EBIT margin, like what is leading to that? Why is it declining from 15.5% to 12.9%? That's his question. It is led by the amortization charge. Neeraj. Yeah.
Amortization of capital foods.
Yeah. Okay, and there is one question asking what would be the growth strategy for Tata Sampann moving forward.
So Tata Sampann, we very clearly said that we want to be a total pantry brand. We've identified very clearly the categories that we want to play in Tata Sampann. Right now we are in pulses, spices, and a variety of other pantry products. As we gain scale, and improve both our brand strength and therefore pricing power and our back-end procurement, we continue to improve margins on Sampann.
There's a question from Sachin asking, when you say growth businesses will be 30% of consolidated revenue, does it also include Capital Foods and Organic India?
Yes, we said before we did this integration, we did this acquisitions, we had said we expect growth businesses to account for 20% of our top line and growing at 30%. Just as this thing last quarter, we grew at 18. Going forward with Capital Foods and Organic India, we expect growth businesses in India to be 30% of our portfolio, growing at 30%.
Thank you. Thank you, Sunil. I think we've covered most of the questions, actually all of the questions from the webcast now. So yeah, with that, I think there are no further questions in the Q&A queue as well. I would just like to take this opportunity to thank you all for joining the call. If you do have any remaining questions, please feel free to get in touch with us. Thank you.
Thank you very much, ma'am. Thank you, members of the management. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.